Hi, this is Beau Eckstein with the Investor Financing Podcast. And on this episode, it's a special episode. I was actually a guest on Vinney Chopra's podcast, but I wanted to share it with my audience because I think Vinney did a great job of asking good questions, and there's a lot of good nuggets in this video/audio. So please take a listen to my good friend Vinney Chopra as he interviews me on multifamily financing and assisted living financing, and we just talk about life and all the good stuff. So hope you enjoy, and I will see you soon.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Well, good morning, my friends. This is Vinney Chopra. Like I come to you every week through my podcast. As you know, this is that book I wrote and got great reviews on it. Almost 350 reviews, guys, in 1 year. Positive, mostly positive, 5-star reviews. And I know my friend today is a great friend of mine, Beau Eckstein. We're going to talk to him about, he did a little promo on it. I remember last year when we launched it, Apartment Syndication Made Easy. And this is the show, the podcast show I started right after I finished the book and published it. And a lot of people are we had 40,000 downloads. We're getting to 50, 60,000 in just a short time. So thank you for liking it, subscribing to it, my YouTube channel also sharing the episode with your buddies, and give that 5-star strong review on iTunes so that we can bring, higher up our level and also get great guests. So thank you so much. I'm going to introduce my great friend, actually, my friend, Beau Eckstein. Beau Eckstein lived in the Bay Area. And actually the home I'm living here right now, my wife and I, he was the ironical person who got us this home. He represented us, with the seller, and got a great deal and everything, good 3 million, whatever. That was a good one. And then also the best thing I also know about Beau, we're going to introduce you formally, that he got me $8.7 million loan in 15-day closing. Hold on, listen to it. $8.7 million loan, 15-day closing from start to finish. The bank or the fund that didn't know me from Adam, they came to Black Hawk Country Club right here. They had lunch with me. That day they flew to the property, and the rest was history. I was in Japan with my family vacationing when my attorney, Milton Colegrove, and Beau made it happen within 15 days. So you are in for a great treat today. And as I introduced, Beau Eckstein is an experienced real estate investor and a loan broker, a good one, a great one. Let me tell you, a loan broker with over 20 years of experience in the industry. And Beau has sold real estate as a licensed agent, originated conventional mortgages, and procured hundreds of millions of dollars worth of real estate transactions, from commercial financing, construction loans, and private money deals also. As a matter of fact, we did deal together with our buddy Mario. He'll be listening to this, and in Rossmore right here, and flipped the home, really nice one. That was a good one. On top of the commercial advisory business, Beau is a market leader for PACE equity. We're going to really dig into that today. If you are really chime in, and come back to this podcast, take some notes, because this can bring thousands of dollars to you in savings, in refinancing, in loans, in PACE financing, HUD financing, you name it. Beau is a specialist in all of that, guys. And Beau enjoys buying cash flow properties and CPACE financing also. I wanted to mention that, top provider of the CPACE. And also Beau enjoys buying cash flow properties in the Midwest, of course, and plans on buying larger multifamily. That's where we do a show together, by the way. Those of us who would like to catch us on Friday at 9:30 Pacific, 9:30 a.m. or 12:30 Eastern, you can definitely chime in and subscribe to that show. We go live in 7, 8, 10 channels right there. You could post your questions over there also. Interactive, buying larger multifamily properties over the next few years. And additionally, Beau has done advanced training in mediation and has volunteered his services at small claims court in the past. I didn't know that, Beau. Man,
Oh,
you've done a lot of things, brother. And Beau is a licensed broker in California and a licensed salesperson in Nevada, as an agent, and also holds his mortgage license in several states, not just one, several states, guys. And Mr. Eckstein recently relocated from the San Francisco Bay Area to Las Vegas, Nevada, and they got married with a lovely wife in December 2019. She's precious. And then he still does considerable business in Northern California, right here in the Bay Area. I live in Danville, Blackhawk, as some of you know. And we've been living in the Bay Area for over 40 years. We just celebrated 40th wedding anniversary. We have 2 children, Neil and Monica, who have grown up. They live also nearby. And then he can conduct, California, but over the last year and reach a network has expanded. It really has, Beau, and we're going to talk about it. I'm so excited about your growth, your successes, and he can conduct business from anywhere and serves the people all over the USA, Beau is also a co-founder of a fintech startup, which is a passion project for him, and he hopes to help investors find the best financing more quickly and efficiently with this, software driven and all the things that are happening in the world. Beau, welcome, buddy. Welcome.
thank
How are
you.
ya?
I'm doing well. Thanks for the nice intro, and it's good to be here on your podcast.
Oh my gosh, I'm so excited. And again, I'm going to come on your side. I think maybe I did already, but it's very much fun. Tell me more about you, actually, how you grew up and all, and how you got into loans, lending, and real estate. I mean, you have so much experience, bud.
Sure. So growing up, I grew up in Danville, originally from the East Coast, but I moved to Danville, California with my family when I was 11 years old. So I grew up in Danville, which is a great place to grow up, right? It's a nice little
Where
bubble.
I live. Yeah.
And
Yes.
I was kind of a wild child. I got in trouble a lot, and I was a good person, always just a little bit wild, as a kid, and really didn't do well in school because I wasn't focused. Early on, I had a learning disability and things like that, and so just really always thought I wasn't passionate about school, which isn't the best thing to have. And so as I was going through high school, I never really opened a book. I never really paid attention. And I was just a
Two
terrible student.
extremes, buddy. Hey,
Yeah.
I was a studious guy.
Yeah.
Back in India.
Yeah.
Yeah.
And then so after high school, I didn't know what I wanted to do.
Yeah.
And I just said, I'm going to go to junior college. And I moved to San Diego and tried to go to junior college. School wasn't right for me at the time, which is funny. Years later, I became a great student, but then I wasn't ready for it. And then, growing up, about when I was 20 years old, I started getting a passion for, real estate. And I happened to meet somebody that worked in the mortgage business. And I went to go work for the company that he worked at. And I started as a telemarketer and quickly became really good on the phone, building rapport with people. And from there, I'm like, well, I'm giving these loan officers all these leads and they're making thousands and thousands of dollars in commissions. I'm going to get my license, got my license to originated loans for a long time. I opened up some branches for a mortgage company throughout Nevada, actually, specifically in Incline Village, Nevada, and Reno. So I moved there from the Bay Area in my mid 20s. And then, the economy collapsed as far as the mortgage business in 2008. So I went through a tough time in my 20s because I had a lot of properties at the wrong time. And I learned about real estate market cycles and really got my butt handed to me during the downturn. I moved back to the Bay Area with nothing. I had $7 in my pocket, basically.
Yeah, hey, you and I have the same beginning then.
Yeah, and then I go, well, I don't have an education, as far as scholastic, and I can't go get a corporate job really, and I don't really have any trade skills. And what I know is real estate, and I do love real estate, and so I just kind of dove back in, because that's all I've ever done is originate loans and sell real estate. So I moved when I moved back to the Bay Area, I started originating residential loans, and this was 2007, 8, and then I started selling properties more, kind of like selling properties more at that time because the loan business was just difficult.
Yeah.
And then I got into lending hard money. I worked with a fund in the Bay Area, and I started doing all these loans for these developers that were flipping houses and building spec homes. And then I said, well, if they can flip houses and make hundreds of thousands of dollars, I can. So I put together a team because I still didn't have much money. And then I had a money guy, I had a contractor. We started flipping a lot of houses. I was always good. I became really good at marketing. And then I got found for a TV show. I did 12 episodes for HGTV on house flipping.
Yes.
And then I realized how important your social media presence and your marketing presence is. And then over time, I started my own company, still flipping houses, but we did a lot of lending nationwide. We started working with various funds. And from there, I said, well, the fix and flip business it's small potatoes and it's a saturated business, and I'm competing with institutional money. So I said, I really want to be a commercial lender. So spent the last, 5 years really learning commercial lending, and the business has just evolved from there where, I'm able to put together capital stacks, and I'm able to, through my ability to connect with people, I've gotten a lot of opportunities. So now I have my own commercial advisory business. And I also am a market leader for CPACE now with a company called Pace Equity, which is they're the first CPACE lender to do the first ever ground up construction project. They're the leader. They're actually a turnkey provider of these. Like, there's a lot of services and a lot of engineering and development that needs to go beyond it. So they're actually the only capital provider that actually does all the engineering and stuff in-house. So we're the turnkey provider. And basically now, especially during COVID, it's important to have your capital lined up more than ever, because although there's a lot of opportunities, banks are a little bit scared right now, which is just kind of a market reaction that happens, because obviously there's certain asset classes that are getting really hammered right now versus some that are doing really well. And now, I basically pride myself on being able to connect with banks at a high level, because there's a lot of lending companies out there. You'd be amazed how many lending companies, regional credit union or local credit unions, regional banks, local and community banks. You got national lenders, and the difference that I provide is that I make relationships with the local and regional lenders, because they're actually doing a lot of deals. Yeah. But where they're really bad is they're really bad at marketing. You wouldn't know about them. You wouldn't find them if you're. So that's what and that kind of leads me to the fintech company that I'm a co-founder of. I had the idea, and one of my buddies is a very successful software developer. So we're building a platform which is going to really kind of really the niche in the business is that we connect with the local level. So we're able to find these credit unions and these banks and partner with them and give them more deal flow. And also the consumer that needs to find the capital, we're able to find them the cheapest cost of funds and the highest leverage, because like I have a deal right now, who's buying it, but they don't have agency experience. They don't have the net worth they have the net worth requirement, but they don't have the experience.
Correct.
To get agency debt. You need to have managed and operated a similar type property. So if you don't have multifamily experience, you're not going to get a small balance agency loan, right?
Yeah.
So the other option is a bank, right? But banks sometimes have a 5-year prepayment penalty. Their strategy is to refinance within 3 years. Credit unions don't have prepayment penalties by law. So I found them a credit union. We're going through the closing process. Their rates like 1.25 points less than they are expecting, and they were expecting 75% leverage. I'm able to get them 80% leverage. So I'm bringing that with this fintech company to an automated process, which should actually will identify these credit union opportunities. On top of that, what we've done really well is build relationships, because at the end of the day, it's still a relationship business.
So true. So very true. So very true. And I've been amazed, but more I've come to know for the last 5 years or so. Amazing the context, the people that you have in your network. You took me to Go Abundance. I mean, that was a fabulous, fabulous, organization that I became member, and we had beautiful time at the steamboat. I still remember that, and the snowmobiling we did and so forth. No, but just so exciting to see that all these different credit unions and banks. I remember in Houston when I went there to do these 10 properties I bought, multifamily, my loan broker there, I didn't know you then, he showed my story, and local banks were really interested in giving the money, at a good price, interest rate, and then also give 80% of the future value. I couldn't understand what they're talking about, after renovations and all. Can you kind of explain? So this is an older property that you're getting loan for, and 80% loan. That's amazing. A lot of people will be happy with 70% loan, right?
Yeah. So really, every project and every sponsor or borrower, we call them sponsors, they're different. The story's different. The story changes. They're building in a new, they're buying in a new location, or they're building in a new location, right? So you really want to create local relationships, because not that every time you're going to go with a local relationship or a local bank. Sometimes you're going to go with a national bank or agency debt or HUD debt. But you really want to know what's available, and every project has different parameters where you want to appease the bank or the lender, and also appease the borrower or sponsor, because right at the end of the day, we want to get the deal closed, and that's what we do. We want to get you as a commercial advisor. Our job is to find you the best debt or equity that you need for the project to get it funded, and do it as quickly as we can.
Sure.
So essentially, we assess what you're looking for, typically you can really get like the overview with a 10-minute conversation, right? I get what you're doing. Let's look at your projections for the next 5 years on this value add multifamily deal or this ground up construction project. And now we're gonna create a loan. We create an OM, just like you have offering memorandums for buying properties. The broker we do the same thing for the loan. We package it up and we get it over to the right senior banker to make a decision. But we know kind of internally what their appetites are, what leverages they'll go to. And now, in the past, when we talk about capital stack, that's basically, if you look at a pie chart or a graph, a pie chart graph, and historically banks are about 65% of that pie, right? And then if you don't have any other funding sources, the developers bringing in the additional 35%. Well, when you're doing large projects, that's not how it works. Developers, they'll bring in a little bit of equity, but they're bringing, what they're looking for is the highest leverage possible, because the more they can borrow, the higher returns they can give to their investors if it's some sort of syndication. So what we do is we put capital stacks together. Traditionally, before PACE was around, for example, you would do 65, 70% bank debt in the capital stack, and then you needed either 30% borrower equity, but that's a lot of money. So they're looking for higher leverage. So in the past, there's either pref equity that they could go out and get, or then maybe mezz. But that's expensive cost of capital. You're talking about capital that could be 12% plus for that cost, right? So where over the past 10 plus years, or 10 years roughly, there's been some legislation passed for this initiative for CPACE. And what CPACE basically does, it does good, because what it's doing is funding all the green components of a build, which is good, because then they measure what impact that has on a positive, for carbon footprints and things, to show that the building's a healthy green building. So that's what we try to do. But from a leverage standpoint, it comes in, we might get 65% bank debt, 20% PACE, right? And then borrower equity 20%. So the borrower or sponsor brings in less capital, gets higher leverage, gets a higher return for their investors, and also does good for society by building a healthier product and a more energy efficient. So it's also it's also approved from like a local level, first state and then local. So it's not in every state or every local county. So we're hoping to get state level approvals and state level processes, because each area has different kind of guidelines. But essentially, you can get usually up to about 20% of the capital stack. It's it's usually a 20 to 30 year term. Sometimes some states only do a max. Average is probably about 25 year.
Yeah.
It's non-recourse except during the construction process, and it's relatively low cost capital compared to pref or mezz. So it's like a unbelievable solution in the capital stack, because if you're building multifamily right now, you're going to get 60% or 65% of cost typically with a bank to build multi. And now you can go HUD, but HUD is very challenging because you have to do, there's kind of there's prevailing wages. You have to work with certain contractors. They have to be able to do the prevailing wage. It doesn't work necessarily in high cost markets because of the price per unit. So that's where, bank and PACE mesh, or bank and credit union mesh together. And so what I've really set out to do is I've set out to build relationships on a national level with the top executives and the top commercial originators throughout the banking and credit union and national platform lending platform world, to be able to quickly assess where the project should go and the best financing possible. But working with any bank, unfortunately, there's red tape. You gotta navigate, because bankers still have the kind of slow paced mentality. Okay, it looks good, Jim. Now we got to bring it to the loan committee. Right? You got to go to this loan committee, and then all of a sudden, so right now we're in uncharted territories. We have COVID. I had a deal, for example, in Oakland, California, and I was brought into a credit union, and this credit union, because it had retail space underneath, they wouldn't use any of the income from the retail space in the underwriting. So obviously the property couldn't debt service, so I couldn't get them the loan proceeds they needed. So we're experiencing a lot of transition right now. So, I mean, if I can give anybody suggestions, is if it's a project that might be a good fit for PACE, start early in the conversations. If it's a project 6 months out, start early, because it's a moving progression. With PACE, you need to get the senior lender on board. You got to have them sign a consent form. So there's a lot of moving parts. So really, you got to get started early in the process, is the advice I have for developers. Some of the projects you're able to do, you can do hospitality, you can do multifamily, you can do different industrial properties. PACE was really big in hotels, up until right now. I mean, we're still big in hotels, but there's not as much construction going on right now for that asset class. And we can also do another big emerging trend is adaptive reuse. Adaptive reuse is basically these old buildings in usually they're in the inner city areas where they've been abandoned. There used to be some big office or kind of light industrial property. Developers are coming in now because of the shortage of housing, and they're coming in and they're repurposing these properties into multifamily. So we're working on a bunch of those type of projects right now. So that's where PACE is really, really strong, and we can really help go full circle and get the project done.
I love it. My gosh. I mean, this is amazing. And, I'm so glad that you are sharing this, because I didn't know myself. I mean, I've been in real estate for 35 years. And that's why it's so important that, one needs to get educated and learn different ways. And you said 20% stack. Oh my gosh, 65% from the bank or credit union, and then do 20. That's 85%, right? Or even 60 and then 20, that's 80. So that's respectable. And you can actually underwrite these deals. It has to be in certain areas, like I understand, right? But it's expanding all over USA big times. Is that right?
Yeah. And and even if it's in a state, for example, whatever state it's in, it could be approved in a certain county, but the county next door is not approved. So sometimes we have to go to bat, and each area has got a local administrator. Sometimes they're nonprofits. And so we build relationships with all these admins, so sometimes we can actually get them to pass bills, because at the end of the day, what local city doesn't want to stimulate the economy by bringing in new business, right? That's what we do. We help businesses. So, or we take an old vacant property and make it into something that's bringing in tax dollars.
Right.
So,
Right.
but government legislation sometimes is a timely battle. But I believe that there's something like $1 billion in funding last year in CPACE, and I believe within the next 10 years it's going to be 20 times that number.
20 times. Wow.
I don't know what I haven't looked and researched what
Sure.
like the economists think, but it's really a solution in the financing on many levels. So I'm excited to be involved with it. And
That's exciting. No, very, very exciting, Beau. And again, like the credit union, that's something I'm so glad. I didn't really somehow in the last 14 years, I've not gone explored the credit unions, but they are amazing people. I mean, they will have less, like you said, no prepayment penalties, like some of the banks, regional banks will. And then also they will give you maybe even smaller percentage, a little bit smaller percentage on the, interest rate. So those are hidden treasures, The CPACE, we did talk about it. How has COVID affected your business? And, and what do you see going forward for the end of 2020? And Q 2021.
Banks often overreact. I think the kind of the cash flowing businesses of like multifamily and things like that, like the lending's pretty easy still. I mean, they're more conservative. You have to have reserves for COVID and things, and obviously but they're still pretty. As you recently purchased a property.
Yeah, we just purchased 2.59%.
Yeah.
Holy cow! 30-year amortized, 10-year fixed, and I think 3 or 5 years interest only, right? I think Freddie gave us that loan. Yeah. Fannie and Freddie were fighting.
Yeah. So Fannie and Freddie are strong. HUD loans are strong.
Mm-hmm.
Certain property types are pretty close to what they were, pre-COVID. And then obviously like right now, like office and retail is challenging. If you don't have strong credit tenants, meaning like in a retail shopping center, if you don't have a strong tenant, if it's a mom and pop, nobody really wants to lend on those right now. It seems like there's money, but it's just, you're talking low leverage. But there's still life companies that will make those loans at 60% loan to value, 65. So, all in all,
stop you there, Beau. Yeah, my very good friend. Let me kind of tell everybody, guys, if you are looking for a great broker, loan broker, if you're buying any kind of commercial real estate, Beau is the guy. I mean, I want to put a plug right now. Beau, how can people reach you? Then we'll continue talking more. I want lots and lots of people reaching my friend, because the thing is, in my academy, so many students have been getting loans, and Beau is closing them. He's getting the best deals out there. So this is the time. I would like everybody to keep this, phone number or email.
Sure.
Beau, share with us, buddy.
Sure.
You can reach you. Yeah.
You can call me or text me anytime. Area code 925-852-8261, or you can go to beaueckstein.com and you can get on my calendar, or you can find out more information, and that's BEAUECKSTEIN. So beaueckstein.com. Either way, 925-852-8261.
Excellent. Thanks, excellent. And I mean, anybody who will work hard for you, harder than, yourself, because you want to close on the loan, is going to be Beau, my friend. And again, just so some of you who might remember when I started this podcast, Beau got me $8.7 million loan, closed in 15 days, guys, including the reports, third party, soil testing, everything. And the group was here in San Francisco. They gave me loan in Atlanta. Look at that. They met me for lunch or something. I remember they had tickets booked to go there that night. Next day, they were at the property. They got everything mobilized. And, that really does speak a lot with the efficiency, that my friend Beau can, take care of you. Right.
Yeah.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Vinney Chopra. I wanted to give this recommendation for my friend Beau Eckstein. I live in Danville in the Black Hawk area, and Beau has been a tremendous friend to me, not only in as a friendship but also as a loan broker. As a matter of fact, I had a chance last year to get a opportunity to get a refinancing done on a loan. And he was able to get $8.5 million loan that closed in 15 days. 15 days. I know I've heard many other stories from my friends where Beau has helped them quite a bit to get the hard money loans and flipping and the construction loans and things like that. So that's tremendous. And I really believe, he's very straightforward. He gives the best terms that are possible and then also walks you through the whole process. And those things are really, really important to anybody like me who does not know how to get, all the applications and things like that. So thanks, Beau. I really appreciate you, buddy. So Beau, tell us more about, buddy, so 2021, I see that a lot of mom and pop, and I think even multifamily, where my main business is, 40, 50, 80 units, maybe there'll be some powder out there, right? I mean, some good deals are coming on the way. And how do you see lending is going to be, right?
Yeah, I think most of the lenders, as far as bridge money for people that are buying value add properties, I think that they feel very confident in the multifamily space. So the bridge lenders looking for these transitional properties, there's billions of dollars out there. I mean, there's so many private funds that are doing bridge loans right now. And yes. I mean, you're talking about big funds that can do big loans, like 30 and $40 million loans.
Wow.
$100 million loans. And there's a ton of capital out there to do that. But there's also like the bridge money for these $2 million acquisitions and $3 million acquisitions. And some of them will go really high leverage too. Still, they'll go, some of them will lend off the stabilized value. And some of them will do it so high where you only need about 5% of your own funds in the deal.
Wow. I love it.
Based on the stabilized value. But, that cost of capital sometimes a little bit more money, but for the right deal, there's funding to come in no matter what scenario. It really, so what we do is we just really assess what's going on. What are you trying to do? If you're trying to exit out of the property on a refi or a sale in 2 years, I'm not going to lock you into a yield maintenance prepayment penalty where you're going to pay, $1 million to exit out of it. Right. So you got to know what's going to happen in the beginning. Or are you going to buy this, stabilized property and you want to hold it long-term? Maybe a HUD deal is the best for you, but you got to know that it's going to take 90 to 120 days because they're backlogged and they have a process. But where else can you get 35-year fixed debt, 2.3 to 2.6 rate, somewhere in there right now? I mean, so there's all these different options. It's really just finding out more about the property, more about you, and then we figure out where to bring the deal to.
I love it, love it, love it. Beau, so for the new syndicators, right? What are some words of advice you will give, who are shopping for loans, right? They're buying 4 units or 12 units or 20 units, 30 units. What should they look for? What kind of experience they need to have? What kind of net worth? Can you kind of explain that? Yeah.
Sure. So we can get around any of these issues typically, but you should have a nice PFS, personal financial statement. You should have that dialed in. You should have a schedule of real estate owned if you own real estate, dialed in when you bought them, like the values. You can pull a template offline, or you can email me. I'll give you a template for a schedule of real estate owned, as well as a personal financial statement, a brief resume about yourself. Hi, my name's Beau Eckstein. I own 18 properties in the Midwest. This is what I've done. I've flipped 50 houses.
Yep.
Give me your story. That's all you really need in the beginning, and then give me a rent roll. 2 years P&L on the property. If you're doing any CapEx, what's the value play? What's the occupancy level? What year was the property built? From that information, we can size up the loan and figure out your best options. It's very simple. And then obviously, depending on the banks or credit unions, they're going to want tax returns sometimes. They're going to want different things. But initially, we get that information, PFS, schedule real estate owned. current rent roll, 2 years profit and loss on the property, offering memorandum if there is one on the property, pictures if you got them, your bio. Get that to me. We'll size up your deal. We'll give you indicative terms so you know we can go agency or we can't go agency, or we think a credit union is the best option on this, or we think a bridge lender is the best option. Within a day, we're going to give you this information typically.
Wow.
Then you're going to get the best information. Then you decide what way to go. Then we move forward, get the documents in, get the app signed, and then you get a commitment, appraisal order, and finalize the transaction. That's for multifamily deal. Now construction, from ground up and huge rehabs, that's a different story. A little bit more involved. Construction budget, pro formas are very important, but really the basics really. And so any investor out there, you should get that together. When you're talking specifically for agency debt, they're looking for experience. You have to have operated a similar type property. They're looking at location of the property because secondary and tertiary markets are different.
Yeah.
Personal financial statement, resume, schedule real estate owned, rent rolls, 2 years P&L, a pro forma if you're doing a little bit of a value add play. We put that together, and then that deal essentially goes to the regional offices for Fannie Mae or Freddie, and then we can get you a decision. There's a difference between small balance versus small balance is typically anything under 7 million loan amount.
Yep.
You need a net worth greater to or greater than or equal to or greater than the loan amount, and that could be a combination of sponsors. It could be 3 or 4 of you, right? Could be 5 of you.
Is it like up to 7 million? It's 1:1 ratio, and then it reduces after that? Kind of give us some idea.
Yeah, so small balance lending is usually up to 7.5 million. The smaller properties, I would say, is those are the ones that have been getting hammered the most because those are usually mom and pop operators.
Yeah.
So small balance are a little bit more conservative actually than on the bigger players, right? The bigger players, there's less restrictions, which is because they're figuring that they're buying an A-class property. They have if you're buying $1.5 million property versus buying a $30 million property, there's a different operational, you have different operations and skill sets at that point. So they're scrutinizing the smaller deals more than ever. And pricing's a little bit higher as far as agency on small balance than it is on the larger, $10-20 million transactions.
Surely. Wow. It's like, I really want our audience reach you. Yeah. Again, you mentioned that, Beau, and what other advice can you share, with audiences? And again, guys, thank you for listening up to this and even more. The key thing is, you got to really have the best terms. That's number one. Interest rate matters. How many years of interest only you get in the loan? What's the amortization rate? And how quickly can you close? The exciting part is that, I've been fortunate that 29 deals I bought, 29, multifamily deals, I've closed every single one from LOI, letter of intent, till the closing, which is a perfect record, 100%. It's been because of people like Beau, and Beau has been involved with me now, but the loan brokers are so important part of the whole equation. Actually, as soon as I got an off-market deal, I sent it out to my broker friend because then his department was underwriting. I got the loans blessed before even I put the LOI. Within 4 to 6 or 1 hour or day or two, then I put LOI, and that's when you close on time, even before time of 60 days. Because you got the blessing and you got to prepare yourself. See, that's the thing. I teach that in my academy, at the Multifamily Academy. If anybody's interested, just, send an email to John, Jon, John at VinneyChopra.com, VINNEY CHOPRA Chopra.com. Or you could go to my website and /academy/invest/welcome. He'll take you everywhere. Vinney Chopra, VINNEY, Vinney, CHOPRA, Chopra.com. Then our investing passively. We'll meet with you several strategy calls. That's moneelinvest.com. And then, of course, is the senior living, which I'm so excited about for the next 20, 30 years, is the senior living investing.co. So, again, the key thing is you don't want to wait. That's what I want to talk about. Get in touch with Beau right away, because if you're looking at some deals in the next 4, 5, 6 months, you need to have your house in order, I call it, your financial statement, your SREO, your story, like Beau said, your profile, your experience, your everything, so that it's packaged correctly to get you the best loan.
Yeah? Exactly. You nailed it right there. And that's the real... Multifamily is probably one of the easiest commercial properties or asset types to lend on, as far as, a stabilized or, mostly stabilized. And so when you're looking at a deal to size it up, if you're a newer investor, if the occupancy is like 70%, right, you're not going to go agency on that. You're going to go some kind of bridge loan.
Yeah.
Okay. Agency debt is for properties that are 90% plus occupied. Right. So just remember that, like, now if it's like 80% or so, maybe we don't have to go bridge. And when I say bridge, that's like short-term, 12 to 36 month term. We might be able to squeeze in bank or credit union at that point. So it really depends. So that's what we're looking for. We're looking at occupancy levels, how long has the property been stabilized? Mm-hmm. And then, because a lot of times what investors do is they start with the more heavy value add type deals, because that's how they can make the most money, as far as through sweat equity, right? Because if you buy a C-class property and raise rent $200 a unit, now your property, you're forcing appreciation, and then you look to refinance or sell at that time. That's how Vinney got started. That's how a lot of people get started. As you evolve, you start just buying more stabilized properties that have a kind of a set play, which is like turning over the units and raising rents strategically, where you're not doing like heavy remodels. So they all have a different exit strategy, and they all have a different schedule of rent bumps and things. So that's what we look at, and then that helps us kind of assess. And there's just a lot of creative ways to finance these. Some of these small mom and pop properties, you can do a partial seller carrybacks, so you can get some bridge money up front. You can get the seller to carry back 20%. We can structure it all these ways. We just need to know up front how you're thinking about and what the plan is, and then we structure it accordingly.
So true, Beau. Wow. What a great, so many nuggets. Hey guys, I would highly recommend, if you like the content, please give reviews, and you'll see the links down below for reaching me and Beau, my friend. And also somebody who wants to be really transparent, who is efficient, and who really knows what he's doing. I mean, that's Beau Eckstein. I wanted to bring him on my podcast. And as we do a show together every Friday at 9:30 a.m. Pacific. So please also reach out to us live, and you ask us questions, we'll answer live questions for you. You could comment, you could interactively talk to us through the StreamYard, the service we use, and everything. But the biggest thing is don't wait till you get a good deal. And then you say, oh my gosh, I can't close on it because I don't have a good loan financing in order, or I can't afford it because I didn't really take time to go through the qualification process. That's a huge thing. Loan qualification is much better to have it done. Like in my book, I talk about plate number 4, I think, is the loan qualification plate. But you want to get the investors, you want to get the team, investors, brokers, and loan qualification, small plate. It's not a big plate, small plate. You have that. You got peace of mind. You know how much you can afford with your co-sponsors, right? Beau, like you said, you can have 2, 3, 4, co-sponsors on the loan, key principals, we call it also. That way, total net worth of all of you together can get you the loan. The loan amount has to be equal to or more than the loan. I mean, net worth has to be more than that, up to the small business loans of 7 million.
Yeah.
Beau, it's been a pleasure, bud. Anything last parting thoughts you want to share with the audiences? Yeah.
No, I think it was a great conversation today. I just encourage you, if you do have questions, just reach out, go to beaueckstein.com, and I'm happy to jump on a Zoom call with you and discuss how to get deals done, because we can get around pretty much everything with different loan products out there. So just because you don't fit the agency bucket doesn't mean you shouldn't go out and buy the property, because I could probably get a similar deal to what agency would offer, but we might not need the net worth requirements. I know how to get around that, and that's why we work on a local level as well as a national level.
Beautiful, beautiful, beautiful. I love that. Thank you both. Thank you for your time, brother. It's
You're
been
welcome.
such a wonderful, visit with you. And, if you like everything that you heard, guys, in today's episode and the benefits of owning and investing into real estate and how to really learn to qualify for loans and everything today, reach out to us. Our line is always open to see if we can help you achieve your dreams. You can always visit myself at www.vinneychopra.com, V as in Victor, INNEY, CHOPRA, Chopra.com for more information. If you would like to learn more about our Investors Club, passively investing with lots of great over and achieving returns of cash flow and equity gains, please visit us also, where you go to vinneychopra.com/invest. And then also don't forget to like, subscribe, comment, and share this episode if you found value and, which somebody can really get a lot out of this great value. And remember to go and pick up these books on Amazon, if you don't mind, excellent reviews and everything happening. My third book is coming out, which is on senior living investing. And a fourth book is coming out with my buddy, Beau. We are in the process of putting it all together. Excellent information about how to really look through getting the best loan terms and everything, teaching the audiences about commercial loans, qualifications and everything like that, with charts and information and worksheets and everything for you. So thank you so much for joining today, Beau. Appreciate you, brother. And you take care. We'll talk again. And everybody, please chime in next week. Actually, just go on iTunes and say Vinney Chopra, VINNEY Chopra. You'll get to see all the podcasts, because we are putting them all under this umbrella now, in the YouTube also, and also under the Apartment Syndication Made Easy. All the different shows I do every week now, they'll be bunched together right there. So thank you again, and God bless you. Thank you, Beau. See you, brother.
Thank you.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.